What's up, guys? Pitmeister78 here. Wanted to talk about uh, indicators and how they can help, keep you from getting in the market and taking those false signals. So sorry if my voice is a little different. It's my baby sleeping in the other room, so I'm trying to be quiet. So if you see, take a look at our indicators that we have. Again, I use just one indicator at the bottom, a stochastic. You see the average true range down here? I don't really use that. I just like to kind of see what the true range is. But as far as for generating signals, I like to use the stochastics for that. And I apologize, I didn't do any preliminary research on this, so I'm kind of winging it. So hopefully we can, kind of see together exactly what I'm talking about. So let's go over the charts here and let's talk about what we have. I have a stochastic here. Okay. And these arrows are just related to the stochastic. They're just signals of when the stochastics cross each other. So it's supposed to be generating a signal. I have two moving averages. I have three, but you can't see the 200 period moving average. Let's see if we can find it. It's pink, so there it is right here. So I have the 200 period, the 50 period, and the 20. And then I have these two sets of bands on here. I have the Bollinger Bands right here, and I have the price bands, these black ones. I also have this little trend indicator here that it's very sensitive, so I don't really use it that much. It's just kind of cool. It tells you, it's just something else to kind of look at. And then I have this support and resistance indicator. It just tells me where a lot of the bar lows are, where price is likely to have problems, things like that. And you can see it's very good. But I wanted to talk about that too. So using this indicator and the importance of support and resistance as targets. So if we go back to the euro dollar here, price action, very important. First, let's talk about the stochastics. So the theory goes behind the stochastics, at least the way I use it, is that you want to use it when the lines cross. So for example, when the blue line crosses the red line, that's supposed to be, when it goes up, that's a buy signal. When it crosses down, it's a sell signal. So if you see here, you can see you have a cross here, you got a red candle, you got a cross here, still going down, you got another red candle. But the importance of doing this is having everything kind of line up. The stochastics, the price action, and the support and resistance. You really want it all to line up. So like in this case, had we been trading here, we would have seen this pin bar. Now this pin bar would have told us, price action, that price did not want to go down. It had a hard time doing that. We can see, but the momentum was going down. On the next day, obviously, price did go down again and close lower. And then you see we have a stochastics cross, which was indicated right here, telling you to get into a short position. I would not have traded that because it didn't meet my criteria. Now right here, we have another pin bar. Now if you notice the stochastic, if this was really a strong momentum downtrend, the stochastic would be pointing down a lot farther. Kind of like this one in this uptrend when this thing closed and then this one closed, you knew there might be a little bit more going down. This thing also helps you, if you use it with price action, if you just take every short that this thing tells you, you probably won't work very well. It seems to look good on the euro dollar, but this is only for a couple of days. I mean, I know if we go back, it would give us some different data. See, for example, here it's told you to sell, but you got to wait for price action to tell you. You know, here's some support right here. There's also support right here. I would have liked to see this thing close down and inside the bands. It didn't. So obviously, if you would have just taken this and you had a tight stop, stopped out. Now this one, the line was already crossed. You can see here that that's a nice down. I mean, that is a nice down pointing stochastic. Could have got in, would have worked out. This one told you to buy, would have worked for a little bit. Who knows, you might have taken your profit. But I just like to see, you know, when when the stochastics are, you know, crossing and they're big, you definitely want to, you know, pay attention. You can see right here, obviously it gives you a buy signal. He would have got taken out right away. It would have worked later on, but if you had a tight stop, which I would have got stopped out. Again, right here, another sell signal. Boom. Taken out probably on this one too. Buy signal. Boom. Taken out. See, it's just, these arrows just tell you when they cross. It doesn't say how much. So what I would look at here, I would look at the stochastic and say, you know, wow, it's giving you, this thing is way, you know, overbought. I would not be buying here, especially on a tiny little candle like this. This is probably a Sunday candle. And then, you know, obviously this would have been a good time to sell either here. You would have wanted to jump in right here, and then of course you could have got this right here. And again, it only tells you when the stochastic crosses. It has nothing to do. It doesn't tell you anything else. So it's just something to look at real quick. You say, oh, it crossed, and then you want to examine the stochastic and, you know, see what it's doing. Yes, it crossed it barely. I would not have taken that trade. Look at this. Another sell signal, failure. Sell signal, failure. Sell signal, failure. So again, the signals themselves, you don't want to trade off the signals. You just want to look. When this thing tells you, you want to look down and see what price is doing. Now here, this may, you know, if you didn't see any of this over here, this may have looked like a good trade, because when it crossed, you know, it crossed below the bands again. It made new low, you know, right here. It hadn't made any new lows here, got rejected, but closed above support. So price action probably would have told you not to get in. And again, I would have waited for, on something like this, if I would have been getting in, I would have waited for a confirmation close, which you did get down here, but I mean, that's a Sunday candle. So I don't enter trades on Sundays. And I take profit on Sundays if it's good, but I don't enter trades on Sundays. So that's really what I wanted to talk about. I'm actually going to make another video, because this one's already getting too long, about support and resistance and the importance of using them as targets, and how they're very psychological levels, you know, and they exist for a reason, and people pay attention to them. Like, before I even make the video, I can see right here, perfect example. I mean, boom, boom, look at this, price refusing to go down past this support level. And then once it does, it tries to go back to it, went back to it again right here, and then these, you know, become the new support, resistance. Sorry, right here, all these bar highs, which this hit, and then this hit, couldn't get past there, and now that becomes the new resistance. I mean, it's very incredible. So I'm going to make a new video on that, but I just wanted to show you how you can kind of use the stochastic. It's a nice momentum indicator. It has nothing to do with trend. Stochastics, keep that in mind. Stochastics does not determine trend. It just determines momentum. So that means when the blue line is crossing, that means momentum has shifted. It doesn't have anything to do with trend. So just keep that in mind. It's only momentum. But if you just trade off the signal alone, you'll see that it's a failure many times. You know, fail here, fail. That would work. This one worked. Fail here. So more often than not, they fail. So you just want to keep that in mind. That's all I had for you here. Again, sorry for my voice and stuff, but I don't want to wake up a 3-month-old sleeping baby. So thanks, guys. Take care. Email me if you have any questions.